What is the Friday curse and why you should be aware of it or maybe take advantage of it? An Australian earnings season gets underway with a better than expected print from JB Hi-Fi while US earnings season continues. And we're awaiting NVIDIA's results. My name's Jessica Amir, market strategist here with Mumu. Thanks for tuning in to the daily. We saw US stocks sour on Friday, the S&P 500 down 1%. And that's because we had a stronger than expected US jobs report basically and a jump in US wages. Now, it's simply pointing to there being no need for the US central bank to cut interest rates this year. So that's what markets are contending with. Amazon, the hardest hit, falling 4%. Tesla, Lululemon, and Google were following. They all reported or etched losses of about 3% or more. Now, let's just show you what is going on. What's the Friday curse? What is this that Jessica's talking about? Well, I noticed by looking at the candlesticks, this is what we can see in front of us. A candlestick on the far right-hand side, that is representative of the Friday close, the pullback in 1%. You go back to the next Friday on to the, I guess, buffering in from that, and that's another Friday that's basically showing a red day, as in the market fell. And then at the top of the page as well, further along, we can see another red candle falling. That's representing another Friday red pullback. And then further on down, we can see toward the middle of the screen, middle right, we can see another red candle. Basically, all I'm showing, these are candles. Each candle is a day. A red candle is a down day. All I'm representing is the thesis that markets sour on a Friday. This needs to be taken seriously. Stocks typically do see heavy selling on the last trading day of a week, but this is something that traders and investors really will be leaning into this year. And it's probably going to be something that you might see a lot more of. So what does this mean for you? Whether you're using Mumu or you're not, you need to maybe think about maybe selling stocks or taking profits off the table on Thursday, maybe knowing that Friday could be negative if these trends will repeat. Of course, history never repeats, but it does rhyme. And there's a good reason why Fridays are often negative in the US. It's because very important data comes out on the Friday. So just take this seriously. Note that we are expecting more volatility throughout the year. But let's just pause, take a big picture view. What on earth is going on with tech stocks and why would they be under pressure? Well, the US economy, it's stronger than expected. So the market's readjusting painfully for that. Now only expecting a fewer cuts. What are we expecting? Well, we're expecting only 0.5% in total of US rate cuts this year. That's down from 0.7%. It's also worth noting that on Friday, we did a video saying options markets were suggesting that there was going to be a 1% fall if Friday's jobs data was strong, and that's exactly what happened. The S&P 500 fell 1%. So basically note the market is giving you a textbook blueprint for opportunities. Savvy investors and traders will be taking advantage of the things that we're pointing out, and they'll also be taking advantage of pullbacks as buying opportunities. Looking ahead, we are expecting a lot more data to cause bumps this week. We've got US inflation data out, and locally we've got Australian business confidence for January. In terms of what to watch, well, Meta is delivering a show-stopping performance. Meta is the only big tech stock that pushed up to brand new record all-time highs after they reported results. They are trading at a brand new record all-time high. What we learned so far this reporting season, speaking about reporting and earnings from tech stocks, all in all is that the average S&P 500 company is reporting earnings growth of 13%. Tech stocks, the NASDAQ 100, earnings growth of 21%. And Meta, we're showing this because Meta, Amazon, Alphabet, and Microsoft all said that they intend to invest $320 billion this year into AI technologies. Amazon offered the most ambitious. They're planning to spend about $100 billion on AI. That's something to consider. But tech companies, look, they're not only investing billions into AI companies, but they're buying truckloads of NVIDIA GPUs. And NVIDIA is the last big tech company reporting out of the Mag 7. They report on 26 Feb. It's also worthwhile noting out I checked the MACD, moving average convergence divergence, a little bit earlier, and it's suggesting that NVIDIA stock is breaking out. So you should be keeping your eye on that stock if you aren't already. Expecting more upside is what I'm saying. So Australian markets, they're expected to sag on Monday, given the sell-off and risk-off tone on Wall Street. But I think traders and investors will really start to process fewer rate cuts and then buffer into stocks that are able to grow their earnings and sustain the bumpy ride. Many investors will be looking for opportunities, and down days as opportunity to buy the dip. Australian earnings season, really important to note that kicks off officially this week. CSL, the biggest healthcare company in Australia, reports tomorrow, followed by CBA the next day. CBA, of course, the biggest stock on the ASX. That'll be really important to note on Wednesday. But just to recap, what is earnings season? Well, it's basically when a company releases their results and their outlooks, and their shares typically move around reporting season if they deliver better than expected goods and a rosy outlook. If they deliver sour grapes, their shares usually fall on the disappointment. Now let's bring you one company that's delivered the goods today. That's JB Hi-Fi. So here are JB Hi-Fi's results. It looks like the market is really liking these, or probably will like these when trade kicks off. What are they liking? Well, we're showing you their revenue. Their revenue rose 10% to $5.7 billion. That's a record amount of revenue for JB Hi-Fi, for this Aussie tech stock darling. We can also see that their profit rose 8% to $185.7 million, and that was above expectations. So all in all, a really good set of numbers here. And if we can have a look at JB Hi-Fi's shares, prior to this report, they were trading at a record all-time high. So it is worthwhile keeping JB Hi-Fi on your radar. For all stocks and ETFs that we've mentioned today, please head over to Moomoo's platform. Stay abreast of reporting season using Moomoo's Earnings Hub. Thanks for your company.